Howdy, traders. Well, it sounds like the political issues are making some progress this week. At least that's the initial headlines. I think the politicians are just trying to downplay what's actually going on behind the scenes. But who knows? We might get some resolution by the end of the week in some of this political turmoil. I'm going to look at the global view, U.S. futures, uh, trends that are setting up, and then take a quick look at this week's earnings calendar. Okay, so far this morning we have our Nikkei gapping up above the descending trend line. It has been under extreme pressure the past several weeks so far this year. Getting a little bit of responsive bid this morning, short covering rally. So just keep that in mind that the oversold situation in the Nikkei's seems to be improving. Now, I can test this is a short covering rally in the Nikkei, mainly considering how far down it is right here on the weekly, and look at how light the volumes are. I mean, it's well beyond the highest volume of the day, and we have a gap up and above the downward trend line. So just keep that in mind that it's a short covering rally off of an extreme low situation. We are gapping up above our 125 week SMA and into a buy zone for the 2018 value on our Nikkei. So this definitely could have some legs to it from here because we are entering back inside of our established bell for 2018 for the Nikkei. But I do, what concerns me is the extreme low volume in the early hour session. In my opinion, this should have been a leading volume indicator for the Nikkei. And one second here, let me change my time frame. If you go out 10 years or 15 years on your Nikkei, I want to point out just how important this channel is for the Nikkei. And this responsive bounce right here, right now, is very important for the global markets, in my opinion. So, but as we tromp along over the next couple months, we're going to see that 125 SMA coming out of this upward trend line, and it's going to add a lot of increased pressure to the downside for the Nikkei. And as of my last video, I was given major concern warnings of what was happening there, and it looks like we're trying to resolve to the upside. Okay, we're going into the trade talks this week with China catching a massive short squeeze situation. And basically what we've done, the breakdown that happened back in December 14th in the Shanghai Composite, we are back testing that breakdown trend line right here. So keep this in mind. I mean, we could be nearing a topping situation in our Chinese stocks until we get an official word that they've got a signed deal on the table. So a lot of risk trying to push the longs going into the opening session tomorrow, in my opinion, in relation to the Chinese trades. Now we have a little bit more room here on our Hong Kong market. We're coming up to what was priorly a dual resistance zone for the Hang Seng. So keep this in mind. Probably by the time it closes, China closes, we're probably going to be right up to that resistance. So that's another reason to think be careful to the long size in the morning. It looks like the short squeeze is about done, in my opinion, for the Chinese markets until we actually have an official signing word out that they've struck a deal and are ready to sign some papers. Just a theory that I'm floating there. Now the DAX, we had a little bit of short squeeze yesterday, and we're probably going to have a short squeeze right into this primary down channel zone. And that's the situation we're setting up for tomorrow. So just keep this in mind. If the German DAX continues to catch a bid, we are going to have a range change in the German DAX tomorrow. So this is the primary thing I'm looking for tomorrow in the markets. to tell us if we are going to continue to go higher for a continued breakout in the markets. So just keep this primary downtrend channel on watch, and we closed about halfway, halfway in between this little wedge here, and we're definitely, because of the close in the markets, we're probably going to be gapping up right on the bottom of this wedge, and that would signify a continuation to the upside during the normal market hours. Okay, on our EWG, that's our iShares Germany, and this is traded during the regular market hours. We are right here, right now, pushing the top of this week's expected move for the German DAX. So I just want to point that out here. We're already to the expected move, and the purple one, that represents the expected move low from last week. So basically, we had the massive sell-off last week, and we're having a massive rally this week in the German DAX. And we are potentially breaking into a new trend zone, which we didn't do last week. So just keep that in mind, that I do see a lot of opportunity to the upside here. It looks like the prior week's close was 2680. That is the target that I am looking for this week on the German DAX. So I am bullish this market. But I do want to point out we're going into the overnight session where most of the indices are exceeding the expected moves for the week already with 3 days to go. So keep that in mind on your trading. Okay, I'm going to talk about the futures now. What's shaping up in the morning session? The bonds are at the weekly value low right here, right now, which historically is the buy point for the bonds for this week. And considering that the we're exceeding market maker moves on the indices, and the bonds are not breaking down below the expected move for the week. There's a divergence going on there, and there's still a risk on trade very much in effect going into the overnight session, despite the fact that we're exceeding market maker moves. So I just wanted to point that out. This is the responsive buy zone for bonds into from this point for the rest of the week. Typically, traders would buy here to add to the long positions. So we'll see what happens by the early morning hours. The S&P futures highs of the session here at 1:33 a.m. and seem to be pushing higher on a strong buy signal in the ES futures. And it's important to note that we are in a clear zone. We've cleared all the 200 SMA and everything, all the way for a move back up to the 2800. So despite the fact that we are down to lows where it's a responsive bid for the bonds, I mean, considering that we have a relatively easy move to the 2800 point now in the ES futures, the bonds are more likely to be a driving force. A breakdown of the bonds should be a driving force in the morning for yet even higher prices, in my opinion. A secondary driving force that I see happening tomorrow, as you can see, crude loves to test the 2 standard deviation on the 1 hour. And we have a somewhat of a little bit of a squeeze going on here in the crude oil Bollinger Bands. I think tomorrow we're going into the crude inventories. Plus, we have the Saudis came out and they are going to be their production levels are actually going to be lower than what the initial forecasts were, and that news came out yesterday. And some of it was digested in the markets, but I do not think that's fully been digested going into the numbers tomorrow in the crude inventories. So I do think crude is actually going to be a driving force for the markets, even in addition with bonds. And what further validates my crude thesis, we are undervalued for the week on crude. Right here is what our expected value, 53.90 was our expected normalization value for the week for crude, and we are underneath that right now. So like I said, given the news that came out about crude, and we'll see how the numbers come out, I can definitely see a run up to the 55 area fairly easy on crude if we were to get some positive headlines to support the move. And what has really been driving the crude down, and that has been the absolute outright breakout of the dollar. And now, since we're hearing some positive talks out of the euro over the whole Brexit situation, it looks like a pipe top. The past 2 days was a pipe top on our dollar index, which would be supportive for higher prices in crude if that does pan out to be the case. Important to note that right here, right now, we are testing the 200-day SMA on the daily NASDAQ. And the 7150 area would be the next responsive area for some resistance. So just keep that in mind. That's another 100 points higher from where we are marking, right about 90 points higher from where we're marking right here if the markets continue to do this rally tomorrow. So just keep that in mind. We are above our 125 SMA, so we are on the bullish side of the trend. It's important to note on our NASDAQ, we are already at a 2 standard deviation move on our 4-hour chart. So basically, this suggests that there's not going to be any more significant short squeezes happening in the market. The driving force higher now in the markets are going to be actual new participants stepping up, buying into the markets with a standard deviation of that magnitude going into the end of the week. So I just wanted to point that out. If we were to get some responsive selling, that the NASDAQ does seem to be a little toppy here. And then the last of my futures I'm really going to talk about, and that is gold. We are back above this downtrend on our gold, and we have on our 1 hour, we have a squeeze situation setting up on gold. So just keep this in mind. The dollar, as it's dropping off, we could probably see a decent little bid in gold tomorrow for trading. So that's it for my futures. Let me move on to the some other topics here. Some things that happened in the overnight session. You had Activision, and it just pretty much a flat. I mean, it didn't have much of any movement in the overnight session. The numbers are really bad and stuff, but it's come down so far that we could see an actual short squeeze in the stock. Twilio had run up considerably into earnings, and it just kind of flat on the earnings. And Akamai is another one, pretty much flat. Looks like all three of the options holders at this point are going to be taken on the chin. Not a big enough move to justify the options. And that makes sense considering the indices seem to be pressing out past expected moves, so it's really tough to be pushing things forward. Teva is going to be a hot one tomorrow. They specialize in discount pharmaceutical products, pharmaceutical drugs. They should probably really rally pretty good there. And as far as the morning session, that's the big one that I'm talking about. But in the after hours, you got Cisco, and then you have Yelp, okay, and TripAdvisor. Those are the three big ones for tomorrow's. Marathon Oil also because of the oil thing. So, but basically three big ones for the, and Cisco's a big Dow component. But the biggest one for the week that I'm watching, that's NVIDIA. That's Thursday night, okay? And so just keep that in mind. And NVIDIA, let me show you that chart real quick. Okay, one scenario thing I want to talk about in the 1 hour, NVIDIA, we're starting to see a squeeze develop. So anytime you see a squeeze pattern, you can see a short covering scenario going into the earnings. So keep that in mind. If the markets start breaking out tomorrow, NVIDIA is squeezing pretty hard here. It could run with it. Scenario I'm looking at here, you see this downward trend line here? Basically, NVIDIA very easily, if it can rally into 156, 157 area to this trend line, into earnings, deciding which direction it wants to go. So there is a distinct possibility, if the markets continue to rally, a $5-6 move, or yeah, about $5 move in Nvidia to the upside. Just keep that in mind. Now, as far as the Nvidia earnings go, what I'm more concerned about, Nvidia is a specialty semiconductor, and they specialized in the Bitcoin boom, and they also specialize in the gaming industry. And if anybody's been watching anything about the gaming has just gotten decimated. Twilio, Activision Blizzard, and Electronic Arts have been the hottest trades for this week. And if the gaming industry is getting impacted as bad as it is, and plus you've had Nvidia announced twice they've lowered their earnings expectations and guidance. So keep that in mind, that this is going to be, because it's such a niche supplier of chips, that they could have problems for much longer than what the investors care to admit. And honestly, I don't see any serious support until the 95.50 area for Nvidia. So keep that in mind. That's another third haircut from where it's currently trading at. So just keep that in mind and on your watch, that 95.50 is a distinct possibility for Nvidia. Now, on the flip side, in the semiconductor industry, this is where you want to be. Exelnex, that's going to be the growth story for semiconductors for several years out from here. And they specialize in the 5G networks. And now, since Trump is going to be coming out, possibly later this week, he's going to ban Chinese telecom from supplying services to U.S. companies, and which rightfully so. I think he's right to do so. And by doing so, companies like Exelnex, they're going to catch a massive rally on that news. So as soon as that news comes, this thing is really going to take off to the moon. It's already started the breakout. I said weeks ago it was going over 130 a share, easily over 130 a share this quarter. And this I'm thinking a three-part move actually. And we could actually, going into the next quarter, 150 area for Exelnex. So just keep that in mind. This is my most bullish area in the semiconductor space that I think is setting up here. If you ever wanted to take some swing longs, this is the scenario where you want to be at long. And actually, I was calling this out in the chat rooms this morning, and I took a trade on it, but I took my quick cash on it for a day trade, but this is a much bigger swing trade opportunity for anybody interested. And for the options, the 115 calls, that's what I got. The 117 is really paid, but the 115 calls, which I did for the day trade, I almost doubled my money this morning, and then it came back in. So I was happy with what I got, but yeah, this is just the beginning of a much, much larger move, in my opinion, for Exelnex. And this was actually one of the best performers in all the stock market today, if you had the right strike on the Exelnex calls. And like I said, it's just beginning. Now, another one that was top performer today, that was Electronic Arts. Okay, up 5.23%. This is one that I am not bullish about. Okay, and I do think the markets have this wrong. We'll see how it all works out. We are above the 125 SMA on the daily, so this is, yeah, it's on the bullish side. But I think the earnings were just absolutely horrible. You see, it gapped down on earnings way down here to 78, and we've had basically a 22% gain, 25% gain since earnings, all off of hype over a free game which they launched and millions of people are using it. This is not a fundamentally advantageous scenario to continue pushing to the long side, in my opinion. Another stock that had a gap up today and will continue to go with the markets if they continue to go higher. But fundamentally, Micron is not a long, in my opinion. Technically, yeah, the markets are catching a bid. we're already past a 2 standard deviation move. So basically, in my opinion, if you get back to a double top on Micron, you want to fade the move, in my opinion. The spaces that they're in, cloud and DRAM, that those are some of the weaker areas in the technology space. So pop should be faded, in my opinion, on Micron. We are let's see here. We're coming up and back testing this 200-day moving average on Micron. But I do think, depending on the markets, that this is not an area you definitely want to push to that long side. And the last one I'm really going to talk about today, and that's analog devices. And on our daily, we are all-time highs, breaking out past the 2 standard deviation move. This is a major Apple supplier. I'm not a big believer in this move. I mean, we're going into earnings knowing the Apple's earnings are coming out. I think the markets definitely have this. They're trying to find something where there's nothing to be found. I mean, so if you were, like I said, if we are hitting a high in the markets, ADI is one of those areas that I would be considering to the short side, considering how the latest numbers out of Apple sales in China in December were 20% down versus Huawei. They gained over 20%. So definitely there was demand for cell phones in China. It's just that Apple is not resonating to the consumer in China. And so it doesn't make one bit of sense why this continues to go higher here, in my opinion. Okay, I mentioned some of the top performers, and like I said, the markets look like they're going to go to 2,800 on the S&Ps, and but I did point out some trades that look like they're pressing to the highs that are non-sustainable. Okay, good luck, and I will see you guys next video.